Hello everyone, in this video we'll be solving another sample paper of CMT level 2. Before watching this video, make sure that you've checked the description box below. I've given the link of the playlist wherein I've discussed all the chapters in extreme detail. Other than that, there are some videos where I have solved other sample questions, so make sure to check them out. Which of the following is a component of code of ethics? Use particular care in determining applicable fiduciary duty. Use care and independent professional judgment. Maintain and improve the competence of other investment professionals. Practice and encourage others to practice in a professional and an ethical manner. So, which of the following is a component? This is not true, this is not true, this is not true. The answer is encouraging others. Alan Johnson, CMT, is working in the Singapore office of German Investment Corporation. From an informal conversation, Alan learns that the company's most recent annual report contains misappropriated information. No one at the Singapore office expresses concern. However, because there has been no breach of Singapore's law, Johnson should do nothing because the branch is outside of German jurisdiction. Seek advice from the company's counsel to determine appropriate action. Do nothing because the branch is outside of Singapore's jurisdiction. Disassociate himself from the case with a written report to his supervisor. So answer is going to be D, right? B, right? Why? Because he needs to take advice from the company counsel to determine what action should be taken now. Okay. Question number 3. Which one of the following most accurately describes the CFA Institute standard about material non-public information? About using material non-public information. Analysts um, cannot use non-material non-public information, may use material non-public information as long as it is for his personal use, and material non-public information, if it is legal to do so in the country, may use as long as it has been developed under the mosaic theory. So what is the answer? The answer is going to be D. Okay, so because see, you can only use non-material, non-public information as long as it has been developed under the mosaic theory, and you know that that is what was written in the standards. Adam Green, a portfolio manager, is making a presentation to a prospective client. Green says that a new portfolio manager, he made an average annual return of um, 40% in the last 2 years at his previous firm, and that based on this, he can guarantee a 40% return to the client. Which of the following is in accordance with standard performance presentation, implying that he can guarantee a return, stating his past performance as long as it is fact, imputing his past performance to future performance, implying that he can generate a return based on just 2 years. Which of the following is in accordance with standard performance presentation? So, answer is B, because stating his past performance as long as it is a fact is all right, but the rest are not okay. Kai Wong CFA, is concerned about the activities of several of his co-workers and feels legal violations are routinely overlooked. According to the code and standards, the recommended first step would likely to be take legal counsel, contact industry regulators, provide her supervisor with a copy of the code and standards, review the company's policy and procedures in order to report any sort of okay. So the first thing he needs to do is he needs to contact the industry regulators, okay, and then he has to talk to them. An analyst has several group of clients who are categorized according to their specific needs. Compared to research reports distributed to all clients, reports for a specific group will definitely include more basic facts, may include exclude basic facts, cannot be selectively distributed, will not be allowed because it violates fair dealing. So answer is going to be B, right? Because since everything is in a group, it may exclude more basic facts. Question number 7. Steve Smith, CFA, is an equity research analyst for a long-term investment fund. His annual bonus is linked to annual trading profits. Under a new policy, the assessment period is switched to a monthly assessment period. According to the code and standards, best practices dictate keeping the policy change within the firm, keeping the policy change within the firm and existing clients, updating disclosures when the policy change is implemented, requiring Smith to obtain permission from each client prior to implementation of the new policy. So he needs to basically update all the disclosures, right, whenever the policy is being changed. So the answer is going to be C. Question number 8. Which of the following actions would be violation of standard conduct as participants in CFA Institute programs? Violation: exaggerating the implications of CFA, misrepresenting information in professional conduct statement, participating in civil disobedience movement to oppose a government action, using the CFA designation without submitting a professional conduct statement, and paying annual dues. So answer is going to be B. Paul Jones is a chemical industry research analyst for a large brokerage company. That industry is currently seeing an increase in mergers and acquisitions. While flying through Chicago, Jones sees several senior officers who she knows from the largest and fourth largest chemical companies walk into a conference room. She concludes that negotiations for an acquisition might be taking place. Okay. Jones should may not act or cause others to act, may not act but advise others, may use this information to support an investment, uh, or should inform her compliance officer. Okay, so now you need to know that she basically sees several senior officers, right? And inside a conference room. The whole point of conference room was for this type of purpose. So it is legally allowed, right? So she can use this information. Okay, question number 10. In a meeting with his firm's senior research analyst George Powell, a proponent of CFA Institute, stated that the key objective of ROS is to create voluntary reporting research practices that promote independent objective research to CFA Institute on an annual basis. With regard to this statement, his objectives are stated key objective is to create voluntary research practice to promote independent and objective research. That is not true. This is stated nowhere. So the answer is B, which is not one of the Dow theory principles. Trends are classified as primary, secondary, and counter cyclical. The averages discount everything. Volume goes with the trend persists. Okay, the last three are correct, but this counter cyclical thing is false. Okay, beta measures. Now, what is beta? Beta is with respect to the benchmark index, right? So let's see if there is the answer. Benchmark index. The amount of risk in a portfolio compared to the expected returns of any equal weighted index. Okay, here they are just talking about risk. Fine, let's read all the options then. Amount of excess returns in a portfolio over the risk free rate of return, not true. Amount of volatility in a portfolio attribute to macroeconomic news, not true. Amount of volatility in a portfolio compared to the market volatility. Now, what do they mean by market volatility? They are talking about the benchmark index. So answer is C. 13. When using the RSI as an overbought or oversold indicator, a sell signal is generated when RSI declines below its lower reference line and then rallies above it. Well, that gives you a buy signal, so this is not true. RSI rises above its upper reference line and then crosses below it. That is true. So the answer is B. When analyzing price action and volume, low activity or a drop in volume is normally associated with low activity or low volume. What does that mean? When analyzing price action and volume, low activity is normally associated with a weak price trend, which can be true. A strengthening price trend, not true. Greater fluctuations in price, lack of conviction on the part of traders. So the answer should be either a weak price trend or a lack of conviction. Which one is more suitable? The option D. A correlation coefficient of 0.75 between two variables suggests that there is a, what is this, positive or negative? It is positive, right? So the relationship is strong between them. It's not very strong because if it is very strong, it should be even more. Near the end of a recession, bonds turn up before stocks and commodities. Stocks turn up before bonds and commodities. Commodities turn up. All the asset classes go together. So always bonds turn up before the stock market. So the answer is A. Which of the following asset classes is a leading indicator for the stock market? Leading indicator: energy, precious metal, bullion, and bonds. What did we just discuss? That bonds turn up before stocks and commodities. So the answer is bond. Identify the following assumption under the correlation coefficient: linearity, normality, outliers, and homoscedasticity. We studied this very in detail. All of them are our assumptions. Dash moving average uses reverse linear weights. Reverse of the linear weights. What would be the answer? It is pivot point. You know that it uses reverse, right? Okay. Interpret the relationship between the S&P 500 and Nasdaq 100 index based on the chart shown below. The Pearson's correlation coefficient is 0.45. What is the answer? Linear line. Pearson's correlation coefficient is 0.45. So, linear relationship. Cubic fit line. Okay. Non-linear relationship. Mm, that I'm not able to see the diagram clearly to be able to say anything. Let me again see. Okay. So first of all, you know that the line which is the best fit line is curve in nature, right? And whenever something is curvy linear in nature, that means that they do not have a linear relationship, because the whole point of linearity means that it is a straight line. So the answer is going to be non-linear relationship, as the best fit line is curvilinear. The strength and direction of a relationship between two markets is measured by two different markets. How are you going to measure the strength and the direction? It would be D, which is the correlation coefficient, obviously. The only effective method of diversifying a portfolio is including asset classes with dash correlation to stocks such as cash, foreign exchange, or commodities, which have low or negative correlation. Okay, so obviously, so that you have diversification. Answer is C. Which of the following indicator combines price, volume, as well as open interest? Tricks, money flow index, true strength index, Herrick payoff index. The answer is Herrick payoff index. So what does Herrick payoff index include? We remembered, we used this indicator in detail. Price, volume, as well as open interest. All of the three are used in Herrick payoff index. Question number 24. What trading decision must a trader take based purely on trend lines on this chart? Okay. As of now, he can hold long positions, right? Because current price action is over here. So I think he should hold. Yeah. So the answer is hold long positions. 25. Which of the following points represent a valid island reversal in the particular chart? Okay. See the chart properly and let me know if there is any island reversal. A. This is A. This is B. And this is C. So the answer actually should be none of the above, because what is an island? Let me first check the answer if it is none of the above. Give me a second. Yeah, so the answer is none of the above. Okay, because what does an island mean? It is a secluded price action, and from there on, the price goes somewhere else. Since there is no secluded price action in A, B, or C, so that cannot be the answer. Which of the following patterns resonate with the price action highlighted within green rectangles A and B? Okay, so you have A and B. What is A and what is B? Okay, B is a bit easier. B is basically an evening star, right? So, is there an answer? Yes. So, obviously, it's very clear that the answer is B, but let's still check the A option, because here it was easy, because the second option, the only option which had evening star was this, but in some cases you might not have that, right? And this one is the piercing line. So the answer is B. Moving on to 27. Dash uses the distribution of
the daily trading range to create a new indicator. Tricks: money flow index, true strength index, intraday intensity. So intraday intensity is the indicator which uses the daily range. You know that. So answer is D. Tick volume refers to the number of contracts traded at each price tick, the number of contracts traded in each time interval, change in open interest in a particular time, number of recorded price changes during a particular time interval. Okay. What was tick volume? Tick volume was the number of recorded price changes, right, during a particular time interval, which means you say how many ticks did the price move in this candle, in this time frame, how many ticks it moved. So the tick volume refers to the number of recorded price changes during particular time interval. 29. mm, when using a two moving average system, which of the following rules can be utilized to get a buy signal? Okay, so when do you buy? When a faster moving average crosses a okay, when the slowing moving faster moving average crosses the slow moving average, right? When the faster moving average crosses the slower moving average from below. Faster moving average hooks the slower moving average from below by when the current price crosses above both of the moving averages. So the answer is going to be D. Why? Because it doesn't hook, it crosses. Here, if there would have been an option of crosses from below, we would have ticked that. But when the current price also crosses both the moving averages, even that gives you a bullish signal. So we can go with that. Question number 30. Which of the following rules can be utilized as an entry strategy for a long trade based on MACD histogram? Go long when the MACD fast line turns higher. Go long when the MACD slow line turns higher. Go long when the histogram crosses through zero from below. Go long when the MACD line crosses above the signal line for the second time, converging the divergence. So we want to see based on the MACD histogram, right? So whenever the histogram crosses through zero from below, then you can go long. 31. In regard to cycle analysis, translation is distance between two troughs, distance between peaks, useful in checking where the trend direction is headed or if it's changing to the right when the peak is beyond the halfway point. So obviously the answer is D, right? What was translation? Translation is to the right when the peak is beyond the halfway point, right? That is translation. Which of the following would be the most useful aspect of a cycle in studying the relationship between cycles with different start times? Phase, period, amplitude, none of the above. So the answer is going to be phase, right? So because it is the most useful aspect. Which of the following would normally be considered as a sentiment indicator? Sentiment. Corporate buybacks, price to earnings ratio, insider buying, the wicks. The answer is going to be the wicks, right? Because that is basically going to give you the sentiment or the fear in the market. When using out of the sample testing, out of sample refers to a small subset of data that was used to optimize the system, the unexpected set of parameters, set of data that is not used. So what is the answer? The answer is C. The payoff ratio is one of the least important statistics. The ratio of profit to loss, the ratio of profitable standard deviation value to the loss standard deviation value, the ratio of the average winning trade to the average losing trade. So the average winning trade to average losing trade will give you the payoff ratio. Question number 36. Dash captures an increasing part of profits as price moves in favorable direction. Trailing stop, obviously. The bias under which, when an event has not occurred recently, the event is perceived as having zero or negligible um, probability of occurring in the future is, we've studied this, we've even seen the flood example, so it is saliency. Dash is a perception bias that arises when you are attempting to take a guess at something you have limited information. So you are taking a guess about something, you have limited information. You remember that to the experiment which was done in two classrooms where one prompt is given, that was anchoring. So if you have watched my chapter explanation videos, these questions will actually be very easy for you and you can see how quickly I'm able to solve it, right? That's only because of the videos. 39. The maximum cumulative drawdown is a measure of largest single loss in a trading system, largest number of losses in a trading system, Total number of losses in a trading system, largest loss in a trading system from an equity peak. So the answer is D. We're talking about maximum cumulative, that is the largest loss, right, from an equity peak. So after going certain point up, what was the biggest correction in the equity curve we had? Question number 40. The dash tracks the degree of mass participation in rallies and decline. Rallies and decline participation is the advance and decline ratio. Dash as a risk measure results in an estimation of price move in either direction. Risk measure, either direction. Price move in either direction. Put call parity, plurality index, implied volatility, standard deviation. So the answer is IV, implied volatility. So you know that IV of a particular option contract is high, or IV of a particular stock is high. That means that a big movement is expected either on the upside or on the downside. That we don't know on which side the movement will be, but we know for a fact that a very big movement is going to occur. Question number 42. A simple way to identify dash cycles is to use dash prices and find the dominant half cycle. Simple way to identify dash cycles is to use dash prices and find the dominant half cycle. Now, whenever we are finding the dominant half cycle, what do you know about that? You know it's weekly, right? So you use a dominant half cycle when you want to find the um, weekly prices, right? That much is clear. Now, so we know what will come here. That would be weekly. Now, the answer can be either EA or either B, intermediate term or long term. Now, read the question again. When you are using weekly, what did we study? It was long term, right? So, the answer is going to be A. A simple way to identify long term cycles is to use weekly prices and find the dominant half cycle. So, if we had a if here weekly wasn't there, then maybe the answer could have been this. So, what you need to always see what two of the options match. Because RS relative strength is so dash, it is used as the primary dash random walk and EMH. Since relative strength is so successful, it is used as primary defense. That doesn't seem very right. Um, how is it defense of? If it's successful, it can't be defense of, right? Because relative strength is so successful, it is used as primary argument against random walk. So relative strength is very powerful, right? So that can basically prove the random walk wrong, right? So the answer is B. Open interest dash when a bull sells his long position to bear who wants to cover his short positions. So open interest will increase or decrease when someone is going to do this. Now, what is open interest? Open interest is open positions, right? So if he is selling his position, closing out his buy, then what happens? The open interest reduces or the open interest falls. When open interest goes flat during a rally, it suggests that bottom fishers are active, new shots are getting created, old shots are getting squeezed, the trend is aging, and the best gains are probably behind. The answer is D. Question number 46. The measurement that tells the system designer how far a trade was in loss before it came back to profit is known as maximum favorable excursion, maximum adverse excursion, return retracement ratio, and the D. So we remember this term, how much loss it had to go into, how much drawdown you had to see even before booking, before it actually came back into profit. That is maximum adverse excursion. Based on 2-day EMA of the force index, which point on the chart represents a valid shorting opportunity if the trend has turned lower. Based on 2-day EMA of the force index, which point on the chart represents a valid shorting opportunity if the trend has turned lower? Okay. So when will you take a shorting opportunity? A, B, C, D. Okay. Shorting is going to be either B or A, right? Because C and D are giving you buying opportunities. A is at the top, so from here the price can probably go down, right? But it could also be B because B went above the middle line and went down. But think about it, it's not middle line, it's zero line. So the answer is A. During an uptrend, the simplest way to detect a trend change from up to down is drawing trend lines along the peaks drawing trend lines along the troughs, draw best first line to the downtrend, use a slope of a long term moving average. So what is the simplest way in this? So when an uptrend is going, you always connect the troughs, right? And the moment the trough breaks, you can go down. So the answer is B. Why is it not peak? Because if it's a downtrend, in that case you would connect the peaks. According to Shabaker's rules, which of the following does not help identify the end of a bull market? Does not help. Stocks become a popular topic of conversation. Popular stocks advance while some companies collapse. Interest rates are high. Trading volume is low. So which one is will not help to identify the this will help, this will help, right? Popular stocks advance while some companies collapse. So even this is um, okay. Again, let's read the question again. According to Shabaker's rules, which does not help to identify the end of the bull market. So, which out of these options will not help in identifying that the bull market is ending? So, answer should be interest rates are high. If the interest rates are high, then the stocks will go down, popular stocks advance while some other companies collapse. Okay, that okay. Stops become a popular topic of conversation. When everyone's talking about something and everyone has a view, then the opposite usually happens. You know that theory. Popular stocks advance while some other companies collapse. What does this mean? This means that before a market fall is going to happen, smaller companies start reversing and the big companies follow. Interest rates are high. Whenever the interest rates are high, the stocks tend to go down. So the answer should be D because we rejected all of the three, but let's also see the logic behind it. So the trading volume is low. Now, it could also be a consolidation. If a trading volume is low, then it could mean a consolidation. You can't be sure that that means that the trend is going to reverse, right? Question number 50. High values observed in the VIX usually means people are very anxious. You know what that is, right? So the answer is C. The biggest drawback of a relative strength system is that high transaction costs are involved, rebalancing and matching benchmark returns. The starting point of the system has massive influence. The portfolio is long only and fully invested, hence, it is exposed to the risks of that particular asset beta. Okay, so out of this, which is the um, most biggest drawback? The portfolio is long only and fully invested, hence, it is exposed to the risk of the asset beta, right? Because relative strength. You remember the chapter, relative strength investing strategy. So you saw it was a long only portfolio, right? And you can also see that you really don't know how much loss you will book in case you have to take a stop loss. Question number 52. On analysis of on balance volume in the shares of Marathon Petroleum Corp, shown below suggests that on balance volume. Okay, so here you can see that the price is creating a higher high and higher low, but the even OBV was creating higher high, higher low, but now there is a divergence because OBV created a lower high and lower low. So that means that the any near term strength should be considered as an opportunity to reduce positions. Any near term dips should be considered as buying opportunities. That's not true. Should immediately exit positions and initiate short positions. We are likely to see pullbacks and then price might start to move higher. So, what could the answer be of this particular question? Think about it. See, should immediately exit. Now, what's wrong in this option? Who said that you need to initiate short options? Just because of that part, I'm rejecting it. We are likely to see a pullback and then the price will move higher. How do you know that the price will move higher? Rejected. Any near term bid should be buying. How will you buy when you are seeing a divergence? Any near term strength should be considered as an opportunity to reduce position given the divergence. Okay. So the moment you see a last spike upwards, you need to exit your positions. Question number 53. In the chart below, the OBV indicator is rising, confirming bearish, confirming bullish price action, right? Obviously, it is confirming a bullish price action because OBV is also rising and the price is also rising. So, answer is B. Which of the following only considers the downside volatility? Sharpe ratio, Sterling ratio, Sortino ratio, return retracement ratio. So the answer is Sortino ratio. What was Sortino ratio? Sortino ratio only considered downside volatility in a system. A reduction in the speed of either K slow or D slow lines indicate reduction in the speed. A reversal on the next day, selling opportunity on the next rally, wait for a pullback. Current trend will continue to dominate on the next day. Reduction in speed of either key or D would mean that there could be a possible reversal on the next day. Question number 56. Although the line charts show higher highs and higher lows, if the D% slow line has lower highs and lower lows, then it indicates, although the line chart shows higher highs and higher lows, if the D% slow line has lower highs and lower lows, then it indicates buying opportunities on the next rally, selling opportunity, fresh selling opportunity as the trend is going to reverse the next day. Hold on to the current positions and wait for the confirmation on the weekly chart. So the answer is B, right? Because see, we are not talking about K%, right? We are only talking about the D%. So if the D% line has lower lows and lower lows, but the line chart is still going up, that shows that in the next rally you have a selling opportunity. When RSI above its upper reference zone, it shows that bulls are strong, but the market oversold and entering its sell zone, overbought and entering its buy zone, overbought and entering its sell zone. So the answer is D. Divergences between RSI and prices tend to occur at important tops and bottoms. Prices are in trading range. Prices are volatile when important news is expected to come in the market. Obviously, divergence happens when low tops and bottoms are being created. Dash is an indicator which measures any security's strength by monitoring upward and downward changes in its closing prices. On balance volume, relative strength index, A accumulation distribution, moving average, convergence, and divergence. So, oscillator and indicator, strength, upward and downward changes, you notice the RSI. Question number 60. An underwater curve measures the drawdown from each successfully high peak in equity. Final loss in equity, how profitable each trade in a system is. The loss in dollars, maximum drawdown. Drawdown from each successfully higher peak in equity is known as the underwater curve. 61. Define ADX. Decline in ADX means market is declining, market is trending higher, market is consolidating, the market is becoming less directional. The answer is D. So if the ADX is decreasing, matlab the direction is now less. If ADX is increasing, that means it is more directional. Open interest can be defined as total number of contracts which are outstanding. That's the definition, right? So the answer is D. 63. A buy signal is generated using two-period RSI oscillator which uh, crosses into an overbought territory, crosses into an oversold territory, crosses the threshold of 10 moving higher, crosses the threshold of 10 moving lower. Okay, so what is a buy signal? Think about it. This is the 10 period. So after the price goes down and it's going up again, you get a buy signal, right? See, when ADX falls below both directional lines, it identifies as flat and dull, dominant group is getting stronger, trend is becoming less direction, the market is in oversold territory. So if it is below both the direction lines, it means that there is no direction in the market at all. Which of the following methods measures the speed of any surge and shows when its momentum is starting to break? Speed of any surge and shows that when the momentum is starting to break. SAR oscillators parabolic trend following system. So the answer would obviously be oscillators, right? Because you're talking about speed of any surge and momentum. So that is going to be oscillators. Question number 66. The price of a stock near its previous low accompanied by a higher low in RSI would be, okay, the price is near its previous low Okay, but RSI has a higher low. That would mean that the price is going to go up, right? So that would be positive divergence, right? It's not confirmation because opposites are there, right? If both of them were creating higher high, higher low, that would be a positive confirmation, but this one is divergence. Question number 67: when price direction is sideways and OBV direction is up, what would that suggest? Moderate downtrend, no determination, distribution period, accumulation period, bottom. So price is just sideways, right? And OBV is going up. That means that some sort of accumulation is going on, right? Because volume is getting accumulated. So answer is D. The VIX is a measure of the implied volatility being projected through fear in the market, right? That is the answer. But read the question again. The question is not that what is VIX or what does a VIX measure. VIX is the measure of the implied volatility, right? Which is being projected through what? What is it being projected through? That's the particular answer. Fear in the market, prices of Dow Jones, prices of oil, prices of S&P 500. D. It's always S&P 500, the benchmark. The most profitable dash are long term. The most profitable investments, the option strategies, mean reversion strategies, trend following systems. So answer is trend following systems, which is why most of the money managers also do this. Given the following daily values for open, high, low, and close, what change would you expect in Chaikin's accumulation distribution index? Open 12, 10, 39. Given the following daily values, what change would you expect in Chaikin's accumulation distribution index? Okay. Now, if you remember the Chaikin's accumulation distribution index, what was the um, formula of it? Half days volume, right? We used to calculate that, and that we are subtracting from previous index, right? Now let's see for an option which is matching this. All days volume would be added, all days volume would be subtracted. Half days volume would be added to the previous index. No, half days volume would be subtracted from the previous index value. So the answer is D. Check in distribution. Volume is usually dash in trading range but dash dramatically after a breakout. After a breakout, it increases, right? High or rising. Sorry, we are seeing the second gap. Increases after a breakout. Volume is usually low in trading range, but okay. So the answer should be B. Bullish divergences are observed when prices dash to a new dash, but RSI makes a dash than its previous decline of value. When prices rally to a new peak, but the RSI makes a lower top. Seems right to me. Mm, bullish divergences are observed when prices rally to a new peak, but RSI creates a low top. Okay, RSI should also create a low, right? So this is not giving you enough. Bullish divergences are observed when prices fall to a new low, but RSI makes a lower top. Not true. Bullish divergences are observed when prices fall to a new low, but RSI makes a higher low. Okay, price is falling, but RSI is making higher highs and higher lows. So naturally, the answer is C. 73. Dash is a valuable piece of information when analyzing patterns, breadth, volume, moving averages, indicators, and oscillators. Obviously, it is volume because when we were even seeing the triangle pattern, the breakout will be confirming it with volume and so on. A sell signal using MACD indicator is generated when the fast line turns positive, slow line turns negative. Fast MACD line crosses above, the fast MACD line crosses below the slow line. So the fast MACD should cross below the slow line. That would be the answer. MACD signals can be improved by thresholds equal to previous. MACD signals can be improved by thresholds equal to previous dash in the indicator and taking the signals only after the MACD line dash the threshold. Enters the threshold, exits the threshold, crosses the threshold. equal to previous average values, previous highs, previous signal values. So what should be the answer? The answer is C, right? Why is it C? MACD signals can be improved by thresholds which are equal to previous highs and lows. We are always going to take previous highs or lows, right? That's what we keep doing in MACDs. And the threshold has to be entered. If the price is in the threshold, then you can take any signal. And in MACD, you always take into account the highs and the lows. There's no concept of averages, divergences, signal values, right? Highs and lows are used to calculate. Question number 76. Which of the following statements is a true notion about market efficiency according to efficient market hypothesis? Market efficiency implies that no one can beat the market price. Which one is true? Okay, this is not true. This is not at all a part of EMH. Pricing errors in efficient market is a non-random variable. Market efficiency requires the market price to be equal to rational value at all times. Okay, market efficiency requires that prices deviate from rational value in an unbiased fashion. So, which one is the most true? Think about it. It is D, right? Market efficiency requires prices to deviate from rational value in an unbiased fashion, which means that we won't be able to predict since it is unbiased. Question number 77. Which of the following statements is a false prediction about price reaction according to EMH, which is false? Prices should neither overreact nor underreact. Prices should change only when the news arrives. Stale information has no predictive power. Linear function between current and past returns can be used to predict future prices. So, which one is false prediction? Prices should neither overreact. This is true. Stale information is true. Prices should change only when true. Linear function between current and past returns can be used to predict future returns. D. This is false. The whole point of EMH is that you cannot predict. Question number 78. Travelers buying an airplane accident insurance after a recent airplane crash is an example of what? Saliency, right? 79. Dash is a perception bias that arises when you are attempting to make a guess at something which you have limited information. Limited information is again anchoring. An investor liquidating stocks that hold paper gains before liquidating stocks. An investor liquidating stocks that hold paper gains before liquidating stocks at current prices have lost money is known as an investor liquidating stocks that hold paper gains before liquidating stocks at current prices have lost money. So, what is this? Disposition effect. A call option writer means call option seller makes money when if I sell a call, I think that the market will go down, right? Okay. A call option writer makes money. What does a writer mean? Selling an option. Very straightforward question. The options were given to just confuse us. Question number 82. European options are different from American options. Why? Because European options cannot be exercised before the expiry, right? So the answer is C. American options can be exercised before the expiry, whereas the European options can only be exercised during the expiry. 83 dash is more likely to signal exhaustion of the current trend, rising volume, falling volume, volume spikes, unchanged volume. So the answer is going to be volume spikes, right? It is a signal of exhaustion. So right before a trend is reversing, there are significant volume spikes which show exhaustion. 84. A dash warning is an extreme turn in one of the indicator plots. This usually indicates at most 2 days are remaining in the old trend. Stochastic force index, average true range, moving average convergence, divergence. That is stochastic. A stochastic warning is an extreme turn. Fine. When is a buy signal given using MACD histogram? Okay. So you know that there is a center line in a histogram, and whenever the histogram breaks the center line from the below, then it gives a buy signal. When open interest when open interest falls while prices are in a trading range, this implies open interest is falling but prices are in a trading range. What does that mean? That means that it is congested.